Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York. It is Thursday. This is the daily report for gold and silver, although I can honestly tell you I don't know how much of a report there is today. We've got an absolutely quiet market on pins and needles, as I believe they're awaiting any kind of news coming out of the European Union and the current crisis over in Greece. Without any kind of real new news to fuel this market has been anemic, tepid. I can't think of any other verbs to say it, but this market has been bland, to say the least. Currently, we're looking at gold off 70 cents, 1172.20, but the key is look at the range that we've had today. Low 70.50, high 77.30. You're talking about a $7 trading range in a market that historically has a trading range even on quiet days that are at least double to triple the size of the trading range that we're witnessing today. A $10, $15 range is not out of the ordinary in a quiet market itself. First, we'll take a look at our daily chart. And our daily chart is still showing us movement to the downside. This, of course, Japanese average. We do have red candles, but when you look at the size of the red candles, you can see that they're diminishing day by day. And what that tells us is that any kind of current trend that we're witnessing is absolutely running out of steam. However, we're certainly not getting any kind of the pivotal candles that we'll typically get at a market that's about to have a key reversal. And when you consider that this market is coming off of a high just above, call it 1205, somewhere in that area, it is flirting now with these lows. It's trading at 1173. Of course, you have this 1160 that is the most recent low right in here. Prior to that, of course, we had our two real dramatic lows, and these are I would call them historical lows, meaning that since the market hit 1920 and began to trade down, these two dips in the market, meaning here and here, represent really the lowest price point that we have seen for the precious yellow metal in years. So the question is, will we find support in this area? Historically, we don't have that much data there that can support that. There's not really any kind of real support level here. We do have this one bottom right in here. This came in, of course, at the end of last year, but we're genuinely trading below that point here also. So we'll have to see. As I said, this market right now is extremely data dependent, and it is absolutely waiting for some sort of news, whether or not Greece remains in the European Union, some sort of bailout package, because realize their payment, I believe it's 1.5 billion, but their interest payment is due at the end of this month. We are quickly approaching the end of this month, and therefore we've got the markets, I believe, sitting on pins and needles. Traders, very much a similar scenario in silver. Now, silver's had a little bit more of a range, currently trading at 1581, puts it off, call it 4 cents on the day. When we look at the highs and lows, we do have 73 on the low side, 91 on the high side. We're trading just at mid-range, but there's been a little bit of action in the marketplace itself. Now, when we look at our current market in terms of a count, I want to first start with our weekly and take a look at what the week is looking like. You can see, really, let's go ahead and blow this up a little bit, but what you can really see more than anything else is over this last month, you've had a diminishing of body size. So the market itself has been getting extremely quiet as it is traded to lower prices. Now, where do we find support? Where do we find resistance in this market? What are key areas for us to look at? Well, we are at one right now. If we take a look at this market trading at around 1590, draw our line across, you can see that we did make a series of lows below that, but they're not so much the body, they're mostly tails, which means that you had an extreme low at those levels, but it tended to close up above those levels. Now, when we convert this weekly chart, which was in Japanese average, to standard candlesticks, we get pretty much the same concept. However, you see that last week was an up week, although slightly up, and you can see that we've been trading very clustered right within this area. In terms of the count, now this is a longer count because we're using our weekly charts, but we're still looking at a very similar scenario where we had this long bear count wave 5, very short ABC. Now, our ABC on a bear count, of course, is going to have an uptrend Your B wave is going to be in the overall direction of the market. C wave, again, is a counter trend. If that's the case, we're now going into wave 1, wave 2, wave 3. We are definitively on a weekly chart looking for lower pricing in silver. I also believe that we could easily see lower pricing in gold. But again, very, very data dependent. If we see this market move, it's going to move on new, fresh, fundamental news coming out of Greece and the European Union. So traders, if you recall from yesterday's show, it was my take at that point that we could see a somewhat of a higher bounce in the market short term before moving back into a lower area. Now we're looking at a half a day chart, and we've got our current Elliott wave count in here. And so we've had our major fourth. This is that long major fourth we talked about, and we're now in our long major fifth. When we subdivide that, though, we're in the tail end of that. 1, 2, 3, wave 4, and we're currently in wave 5. Now, if you look at projections for wave 5, they're saying that it should have terminated or concluded right in this area. We'll have to see, because as I said, we haven't gotten any kind of a technical buy trigger that has issued this market. This kind of a quiet day really doesn't give us any kind of potent information to act on. But again, I wouldn't be surprised to see us get this little up clip. But at the same time, because the market is so data dependent, any news, fundamental news that comes out of Europe is absolutely going to move the scale, so to speak, and we could see further downside action. We could see the market bounce from here, but it's going to be data dependent, fundamental news coming out of the market. And in absence of that, I expect a quiet market, and that is precisely why we are sidelined and will continue to be sidelined probably until tomorrow or Monday. As some kind of news comes out, we'll get a clear indication as to which way this market wants to move. Right now, as I said, we are slightly favoring a small upside bounce in the market, followed by a downturn to come in and hit these lows, as we talked about yesterday, as well as throughout this week and last week. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow for the weekly wrap-up. Bye-bye.